The Labor Department has just pushed back the enforcement of its OSHA testing and vaccine mandate policy for all U.S. companies with more than 100 employees. You may have missed it over the weekend, but I posted this video on Friday that explained a brand new ruling from the Sixth Circuit Court of Appeals that basically reinstated the OSHA policy nationwide and eliminated the stay that was put in place by the Fifth Circuit Court of Appeals. Now, as a result of that ruling, the Labor Department put out a notice over the weekend saying they were going to give employers a little more time to get their employees compliant with the new OSHA rule. Originally, the deadline for employees to either be fully vaccinated or regularly tested was January 4th, but now the Labor Department says it will not start issuing citations for noncompliance with any of the requirements of the OSHA Emergency Temporary Standard before January 10th, and will not start issuing citations for testing requirements before February 9th, as long as the employer is exercising reasonable, good faith efforts to come into compliance with that OSHA rule. So what does citation mean? Well, I told you back in early November in this video that all U.S. companies with more than 100 employees would be required to provide OSHA compliance paperwork for all of its employees, and OSHA would be conducting on-site inspections. Basically, those companies need to show OSHA that all of its employees have either been fully vaccinated, received approved exemptions, work remotely full-time, or has decided to regularly test. The company must provide documentation of those tests as well. For every employee who does not comply, they will be fined $13,000 plus per employee and more than $136,000 if the company willfully violates the rule. Now, understand, as I told you in Friday's video, several appeals of the Sixth Circuit ruling have already been made to the Supreme Court. The U.S. government now has until December 30th to respond. What if I told you you could do something great to help people in need and get a tax write-off at the same time? Well, you can, thanks to a temporary IRS rule. Now, this rule allows more people to deduct a cash donation to qualifying charities on their 2021 federal income tax return. So for those of you who itemize, this is not new. You've always been able to do this. But for the nearly 85% of you who take the standard deduction, this new rule says married couples filing jointly can deduct up to $600 in cash donations, and individual taxpayers can deduct up to $300 in cash donations. That's on top of your standard deduction, and taking this deduction could reduce both your adjusted gross income and your taxable income. Now, this temporary rule was continued through the American Rescue Act and will not continue in 2022 unless Congress passes another law. So for 2021, if you take the standard deduction, you will also see line 12B on your tax form, and that's where you can put your cash donation deduction. There are three things, though, you need to know about that. One, if you want to claim the donation, it must be made to a qualified charity. To look up if the charity you want to donate to is qualified, go to the tax exempt organization search tool on irs.gov, and you can look it up from there. Two, the donation must be made before December 31st of this year for it to qualify for your 2021 tax return. And three, make sure you have a document from that charity to prove your donation, or you can also use a canceled check. That way, if for some reason you need to, you can prove the donation to the IRS at tax time. Of course, the holidays are always a great time to give, and charities across the country have seen dramatic decreases in their donations since the start of the pandemic, not to mention the Red Cross is always in need of help, especially given all of the natural disasters we've seen in 2021. So if you do decide to give, please make sure you're not getting scammed, because there's a lot of scammers out there too.